Hello, everyone. A very warm welcome. Good morning. How are you, people? How is your exam preparation going on? So, here we are with the topic National Income and Inflation Part 2. I hope I'm being audible and visible to everyone. I hope we are all good. Shall we start? So, we had done, in the previous video, we had done the concept of national income and inflation, right? Since this is revision and practice series which is going on, so you would have seen I explain concepts and then we solve questions on it, right? So first video is already done. Please, if you haven't watched it, watch it. Surely, uh, it is a very useful video as I have explained various types of inflation, ways of measuring national income. Okay, so that is it. And then we have in Oliveboard something called as, if you just go, super practice tests. So we have just, you can go to super and you can search for it if you're not getting it. So there are super practice tests. Uh, you can see they are subject wise, topic wise, and level wise. So in quant, I have level 1, level 2, level 3. When you finish level 1, you proceed to level 2. This is as per your choice. Okay. Then we have past year questions test also is there. Repetitive questions test is also there. Speed improvement test is also there. Like this, we have for every subject. So if you're doing for general awareness, you have economy, 5-year plan, correct? Then you have polity. Then we have ancient history, medieval history, modern history. All the subjects are covered. Geography completely. So this is how super practice tests are, I feel, very important and helpful for sincere candidates. Okay, so please explore this option. Let us start our topic for today then. Okay, so national income and inflation. uh, we'll start with the questions. So the first question, have a look. Which of the following is included in calculation of GDP? Is included. Which of the following is included in the calculation of GDP? What do you think? So it is final goods and services produced within the country. Correct? GDP includes the market value of all final goods and services produced within the domestic territory of a country during a given period, usually a financial year. Financial year. Correct? Second hand goods, final transactions, and transfer payments are excluded, and all sorts of domestic work is also excluded. Domestic work is also excluded. So please keep in mind, GDP includes final goods and services. Which of the following represents the correct relationship? Okay, so please tell which of the following represents the correct relationship. GDP is equals to GNP plus NAFIA. I hope you know what is NAFIA, National Factor Income from Abroad. Correct? So, Manoj, good morning. Good morning. Very good. Okay. So, which one is correct? Quick, quick, quick. Answer it. So, which one is correct? It is GNP is always GDP plus NAFIA, net factor income from abroad. So gross national product is calculated by adding NAFIA to GDP. Please remember this formula. Okay, this formula is very important. Next, the value of depreciation is deducted while calculating depreciation. We remove depreciation. When do we remove depreciation? When do we remove depreciation? While we are calculating NNP, net national product. So always remember like this, whenever you are taking something from gross, if you're converting to net, something will be deducted for sure. And usually it is depreciation. If there is gross national product, gross domestic product, anything gross is there. If you are converting it to net, you have to deduce something. Okay. So please remember this formula. NNP is equals to GNP minus depreciation. Very, very important. Okay. Chalo, next. Which of the following is known as father of national income accounting? Who is the father of national income accounting? Adam Smith, Simon Kuznets, J.M. Keynes, or Alfred Marshall. All of them are very known names. So it is Simon Kuznets. He developed the modern system of national income accounting and introduced the concept of GDP measurement. So there is a Kuznets curve also. Kuznets curve is also there. Correct? Next. Which of the following is not considered while calculating national income through income method? Income method. If you remember, we had studied three methods: value added, income, and expenditure method, right? So which of the following is not included? Quick, quick, quick. So it is intermediate goods are not included. Okay, intermediate goods. Wages, rent, interest, profit, they are added. Okay, intermediate goods are excluded to avoid double counting. Double counting in national income calculation can be avoided by how to avoid double counting means any product which has been counted double, that can be avoided by counting only final goods. Okay, only final goods are counted, because goods, if you start counting in a production of a final good, there have been multiple intermediate goods. So if I'm taking those multiple intermediate goods plus I'm taking the final good also, then it is being repeated. For that, only final goods are calculated, so that there is no double counting. Okay, next. Which of the following is component of expenditure method of national income calculation? Mm. Please remember that formula also. So which one is it? It is a component of expenditure method. Which is that? It is government expenditure. If you remember this formula, it is very important. Okay. C plus I plus G, where C is final consumption, I is investment, G is total expenditure by government, and X minus M is export minus import. Correct? Export minus import. Okay, that is net exports. So please remember this method: expenditure method. Consumption plus income plus government expenditure plus X minus M. If nominal GDP increases while real GDP remains unchanged, the increase is mainly due to, so the nominal GDP is increasing, but the real GDP remains unchanged. Why is it happening so? It is a conceptual question. I would like to say it is a conceptual question. It is increase in price level, inflation. Am I right? It is because of inflation. Nominal GDP is measured at current prices, but if real output remains constant, but nominal GDP rises, it means there is an increase in the price. Correct? So please remember nominal GDP. GDP at market price differs from GDP at factor cost due to. So I'll tell you a very nice trick to remember this. How to go from factor cost to market price. Always remember FI. So always remember the spelling fits. Fits is there, no? Correct? Always remember this fits. How? I'll tell you. Factor cost plus indirect tax minus subsidies is equals to market price. Is equals to market price. Will you remember this? Such a easy formula. I hope you'll not forget it. So, factor cost plus indirect taxes minus subsidies fits. Okay? One stop solution. So, what is it? Net indirect taxes. Correct? GDP at factor cost plus indirect taxes minus subsidies. Okay? Always remember. Which of the following causes a decrease in the purchasing power of money? Decrease. Which is causing a decrease? Keep answering, please, everyone, keep answering. How does money's purchasing power reduce? So, if I'm buying one iPhone today for 1 lakh, after 2 years, the same iPhone becomes 1.25 lakh. Means I have to spend more money to buy that same iPhone. That means what? There is a rise in the general level of price. That is nothing but inflation. Okay? Inflation reduces the value of money because consumers can purchase fewer goods and services with the same amount. Am I right? So the purchasing power decreased. Money is the same. Okay? Core inflation generally excludes. So I had explained you the difference between headline and core inflation. So what do you think? What do you think? Core inflation. Quick, quick, quick. Core inflation will exclude food and fuel prices. Okay, inflation removes highly volatile components like petrol, diesel, crude oil, all these things, food items are excluded, but they are included in headline inflation. But they are included in headline inflation. Simple, easy. I hope you're getting my point. Any doubts, you can ask in comment, ask in chat, no issues. Yes, Manoj, correct. Inflation is the right answer. Good. Next. Which type of inflation occurs due to an increase in production costs? Increase in production cost. Demand pull, cost push, creeping या monetary. What do you think? Hint. Hint is this. Obviously, cost push. Correct, na? When input cost like wages, raw material, fuel price, logistics cost, correct? Labor cost, all these thing increases, there is a cost push inflation. That is called as cost push inflation. What is demand pull inflation? When there was demand for 10 apples, that was a definite demand. Suddenly it increased to 100 apples. So this is called demand pull. So the prices, but the supply cannot increase suddenly, na? Supply is almost the same. So this is called demand pull inflation. The prices will rise like anything. Phillips curve shows the relationship between Phillips curve. What is the difference? I had shown in the video. If you have not seen, please go and have a look. Phillips curve shows the relationship between inflation and unemployment. Inverse relationship. Please remember, inverse relationship between inflation and unemployment. How will you remember? UPI. Simple trick. Phillips curve is between unemployment and inflation. Such a simple trick. I wish I had someone to tell me these tricks when I was preparing. Correct? So, UPI. Okay. Phillips curve, unemployment and inflation. Next. Which of the following is an example of transfer payment? Transfer payment means there is nothing, no asset or something you're getting back. That money is gone, one-sided. So, which is a transfer payment? Pension received by a retired person, rent received from property, profit earned or salary of an employee. So, it is the pension received by a retired person. Now, retired person is not producing, he is not at all productive economically. In terms of economics, it is not productive. So, whatever his money is going to him is a transfer payment. It is without any productive service in return. Okay, such as pensions, scholarships, subsidies. These are called transfer payments. When inflation rate becomes negative, it is called what? So negative inflation. Always the exam will have these two options, disinflation and deflation. Now which one is the correct one? Who can tell me? Can anyone tell me what is the difference between these two? Deflation is negative inflation. Deflation. Disinflation is negative rate of inflation. Okay, negative rate of inflation. So deflation refers to continuous fall in general price level. So suppose if today I bought an apple for 10 rupees, next year I bought it for 9. So this is called deflation. But today, if the inflation for that apple was 8%, but next year the price rose by 6%, next to next year it rose by 4%. So inflation is still there, but the rate is decreasing. This is called disinflation. Disinflation. Okay, please keep in mind. Next, which of the following added to GDP to get GNP? What is added to GDP to obtain GNP? We have just now seen. So it is NAFIA, correct? It is earned by residents of a country, both within and outside the country. GNP is equals to GDP plus NAFIA. Net factor income from abroad. If the income earned by Indians abroad is greater than the income earned by foreigners in India, then what happens? Carefully observe. And NAFIA becomes negative, NAFIA becomes zero, NAFIA is positive, or GDP becomes zero. This cannot happen. Obviously, GDP cannot be zero. If income earned by Indians abroad is greater than foreigners, then I becomes greater than F, correct? So the NAFIA becomes positive. NAFIA is what? Factor income received from abroad minus factor income paid abroad, correct? If receipts are higher, if this one is higher, obviously it will be positive. Any doubts, any issues, anytime you can ask me. Okay? Okay? Chalo, next. Which of the following is excluded from national income? Is excluded from national income. Production of goods for self-consumption, service of government employees, sale of newly produced goods or profit of companies. So what is excluded? It is goods for self-consumption are generally excluded unless they enter the market system because their valuation is difficult. Whatever is consumed, we cannot predict their valuation. So that is excluded. Okay, please remember. The difference between gross and net investment is, I told you, from going to gross to net. Just now I told what you will do. You will remove depreciation. So gross investment minus depreciation gives you net investment. Correct? Gross investment includes replacement investment, while net investment will always, it is the actual addition of capital, removing the depreciation, what truly has been added. Okay, next. Which of the following indicates economic growth? So, which indicates economic growth? Increase in nominal GDP only, increase in real GDP, increase in inflation rate, or increase in population only? Can only population increase lead to economic growth? Increase in nominal GDP only? No, nominal GDP can increase only by inflation. Correct? Increase in inflation rate? No. So what is that? Increase in real GDP. Correct? If the real GDP is increasing, that means the actual value of goods and services produced is increasing. That is the actual impact of price change. Okay, so please remember it is real GDP. Now I have brought some statement problems also for you people. Since SSC, RRB, they have already started it. Okay, RRB might start it anytime. So real GDP is adjusted for inflation. Nominal GDP is calculated at current prices. Real GDP always increases when inflation rises. Which of the following statement is correct? Tell me everyone. Try it quickly. Let us see how many of you get it right. Quick, quick, quick. Please try, please try. Real GDP is adjusted for inflation. Obviously. Nominal GDP is calculated at current prices. Obviously. Real GDP always increases when inflation rises. Ah, what do you think? Third statement is wrong. Real GDP removes price effects. So it doesn't have to do anything with the prices. Inflation alone does not increase real GDP because you are adjusting it for inflation. Correct? So please keep that in mind. Next, which of the following is used as a measure of price change in the economy? How much price has changed? See, this is how conceptual questions are asked. They will not directly ask. Okay, price change is repo rate? No. Fiscal deficit? No. Balance of payment? No. Then it is GDP deflator. What is GDP deflator? It measures the change of price of all domestically produced goods. Nominal GDP by real GDP into 100. Nominal GDP by real GDP into 100 is GDP deflator. It will tell you how much prices have increased. Okay, because nominal will be at current prices. This is at current prices. Real will be at base price. So you will get the price change. Inflation that occurs when the money supply increases rapidly is called. Now, the money supply is increasing rapidly. So, what is that? Rapidly, if it is increasing, then it is monetary inflation. Excessive growth in money supply increases purchasing power and demand, leading to inflation. Okay, monetary inflation. Money supply is related to monetary. Which institution is responsible for maintaining price stability in India? This is Halua question. Very easy. Easiest question possible. Which institution is responsible for that? Oh, it is obviously RBI, Reserve Bank of India. It controls inflation through monetary policy tools like repo rate, reverse repo rate, CRR, SLR. So monetary policy is there. Monetary policy, correct? There are two types of tools for monetary policy: quantitative and qualitative, correct? So these are all quantitative tools. Remember we had studied, है ना? So that is why RBI has the function. RBI also takes care of foreign exchange reserves, price stability, lender of last resort. If you would remember, there are 5, 6 functions of RBI. Under the inflation targeting framework in India, RBI aims to maintain CPI inflation at, remember target, we had discussed the target also. Urjit Patel Committee. Urjit Patel Committee. Got it? What is it? Quick, quick. Good, Manoj. Yeah, it was RBI. Good. So it is 4 plus minus 2%. That is the band of 2 to 6%. The band is 2 to 6%. Okay. Clear? Simple. Monetary Policy Committee of RBI targets CPI inflation at 4% with a band of plus minus 2%. Next, which of the following situation benefits borrowers? So suppose you have given me 1000 rupees, I have borrowed from you. Now, which of the following will benefit me? Which of the following will benefit me? Stable prices, it will not benefit. Zero inflation. Deflation, will it help? No. What will help? High inflation will help me. Correct? Borrowers repay loans with money that has lower purchasing power, benefiting borrowers and hurting lenders. So always remember the lenders will get hurt and the borrowers will enjoy. So inflation is good for borrowers. Is good for borrowers. Got it? Chalo, next. Which type of unemployment is commonly associated with recession? So there are various types of unemployment, correct? Disguised unemployment, cyclical employment, seasonal employment, frictional employment. So which one is associated with recession? Recession is associated with cyclical. Comes in cycles, no? Cycles of recession due to fluctuations in economic activity. So always remember cyclical is recession. Okay? Are we clear? Next, if the price level increases but output remains constant, it will result in, so price level is rising, but the output is same. 100 apples means 100 only coming. But apples ka price is increasing from 50 to 100, 100 to 150. What it will result in? In real GDP, will the real GDP increase? Did the apples increase? No, only the prices increased. So nominal GDP talks about prices, correct? So only the prices will increase. Rise in price increases nominal GDP. Nominal means today, as of today. Okay. Real GDP will increase only when number of apples will increase. Okay. Got it? Next, which of the following best describes reflation? What is reflation? Reflation. These are nothing but measures taken to increase prices after deflation. So if there has been a deflation, suppose this is a graph, and if there is a this is deflation. Suppose prices are going down, the government will start measures to increase it, to increase the prices. This is called reflation. When reflation refers to government or monetary measures when increasing demand in economic activity after a period of deflation. Then again the prices start going up. That is reflation. Correct? Next. The value of final goods and services produced by Indian companies operating abroad is included in, see, conceptual question again. Which one is it? Tell me. Which one is that? Good, Manoj. That was high inflation. Good. So, value of final goods and services produced by Indian companies operating abroad is included in India's GNP, national product, national, gross national. Now, national people can be outside also, na? That's why they are included. Considers production by the country's residents regardless of location. So, even an Indian company operating in USA, it will be included. Okay, so always remember national means even in Mars also if some Indian is there and is producing something that also will be counted. Okay, please remember like that. GDP stands for a very easy question. GDP stands for what? What does GDP stand for? Obviously, gross domestic product. Okay, gross domestic product. It measures the value of goods and services produced within a country's borders. In GDP, we will not take outside foreign, only borders inside India. Okay, next. Which method is not used to calculate national income? We had studied three methods, correct? And I had given you a mnemonic for that also. How to remember those three methods? Any, do you remember my mnemonic? So that is PI, production method, income method, expenditure method. So which is not there? Tax method. Okay, so tax method is not there. So please remember pi. Please remember fits. We had studied fits. Factor cost plus income indirect taxes minus subsidies is at market price. Okay. Per capita income equals GDP into population. National income divided by population, GDP by tax revenue, or population by national income. So obviously it is national income divided by population. Total income by all the people, by all the people. Income by all the people, by all the people. Simple. So per capita income is national income divided by total population. That's why we'll get it per head, no? Per capita. Right? Next, which index measures retail inflation in India? Retail inflation, who measures? CPI, WPI, IIP, or GDP deflator? Quick, retail. Retail means at my and your level. So we are what? We are consumers at retail level. So what is that? Consumer price index. It measures inflation at the retail level and is used by RBI for targeting. So RBI will keep CPI in mind whenever they are thinking about targeting inflation. Okay. Always remember whenever the word retail comes, that means R level, consumer. Wholesale means factory level. Always remember like this. So that is why WPI is here and CPI is here. ठीक है? Wholesale price index, wholesale factory level, retail consumer price index. Easy. Next. Stagflation means what? Stagflation means what? Stagnant growth plus unemployment and inflation. This is stagflation. Okay. So stagnant growth or low growth. So inflation with employment and low growth. That is stagflation. Inflation is there, unemployment is there, and growth is low. This is An exception. This is an exception to Phillips curve. Phillips curve. Remember, this is an extension to Phillips curve. And how will you remember Phillips curve, sir? What is there in Phillips curve? UPI. Phillips curve is for unemployment and inflation. Okay, inverse relationship. Consider the following. GDP measures output within domestic territory. GNP includes net factor from income from abroad, and NNP at factor cost is called national income. Which of the following is correct? So we have already discussed all three are correct. GDP measures domestic territory, GNP includes NAFIA, and NNP at factor cost is national income. Okay. Next, which institution releases GDP estimates in India? You should know this. Which institution is that? Yes, correct, Manoj. Good, very good. So which is that? It is NSO, National Statistical Office. Formerly it was CSO. Okay, it releases GDP estimates. Inflation caused by rising demand is called very easy. Like you can guess it from the options only. Demand pull inflation. Okay, so that is demand pull inflation. Aggregate supply. Okay, now again statement problem. WPI measures wholesale prices. Obviously correct. That is why W is there. CPI is used for RBI for inflation targeting. Yes, just now I told you RBI will always think about consumer, retail when they were targeting inflation. WPI includes services. No, doesn't. Who does? CPI does. It includes services. WPI doesn't. So which is the answer? 1 and 2 only. WPI does not include services. It includes only goods. Which index measures industrial growth? So now see, industrial word only came. So you got the hint. You got the hint. Which is that? It is index of industrial production. IIP. It measures the growth of industrial sector. A very important component and parameter to be measured. Okay. Are we going good? Shall we go ahead? Yeah. Okay. Good. IIP Manoj. Correct. Next, nominal GDP is measured at current prices. Yes, correct. Current prices. Nominal GDP. Nominal GDP, huh? Real GDP is measured at constant prices. Bilkul correct. Base price. GDP deflator reflects inflation. Bilkul correct. So all of the three are correct. Correct, no? GDP deflator, remember? And nominal GDP by real into 100 is what? GDP deflator. Hyperinflation means what? We have hypertension, no? When blood pressure increases, we have hypertension. Arey bapre. Means what? The blood pressure rises extremely. Extreme rise. So extreme rapid inflation is called hyperinflation. So hypertension say you remember hyperinflation. Out of control rise in price level is called hyperinflation. I hope we are clear till here. Any doubts? All going good, Manoj? Yes, good. Correct. That is hyperinflation. Good. I hope everything is good. Next. Deflation implies falling prices. Disinflation means slowing inflation. Stagflation combines inflation with stagnation. Which of the following is correct? Chalo batao. Let me see. Did you get the topic? Try this one. 43. Deflation means falling prices. Yes. Disinflation means slowing inflation. That's why it is disinflation. Inflation is there, just that it is slowing. And stagflation is both. Okay. Okay. So going forward, all the three are correct. Which sector contributes the largest share to India's GDP? Which sector contributes the largest share to India's GDP? There are three sectors: primary, secondary, tertiary. Correct? Primary is also called agricultural sector. Secondary is also called manufacturing sector. And tertiary is called service sector. So, which is contributing the maximum? Now, when they ask this question, largest share, it is not as per employment, it is as per value addition, production. Got it? Production. So, which is that? Services. Services almost gives 50% of India's GDP. 50%. That's a huge amount of production, right? Okay. So, the last question, Human Development Index is measured by? Human Development Index is measured by? Who measures it? Very easy question. Super, super easy. Who measures it? UNDP, United Nations Development Program, right? So that was it, everyone. We have done 45 questions, nice conceptual questions on national income and inflation. Correct? Will be coming up soon with other topics. If you haven't seen my previous videos, please go and watch. There are n number of videos. We are bringing all the concepts we brought from polity also, and we have brought from economy as well. Okay, we'll be meeting soon with other topics. Thank you, everyone. See you.